Good afternoon, traders and investors. It's Will here with another one. I hope you guys are doing well. So today we had a bit of a muted day as volumes were very, very low in anticipation of CPI, and the bulls do look tired, I must admit. So we're going to go over a few charts and see if they can muster up the courage to continue to push higher, or if we're due for some further consolidation to the downside. CPI is definitely going to have a big impact on which direction we play out. So let's get into it. So S&P 500, guys, what I'm not liking about these charts, right? So we've been cautiously optimistic about most of the markets. However, we can't ignore the fact that the markets have been upheld by our larger tech names, right? Market breadth is not the best it has been in a while. And we can see that just looking at our equal weighted SPY, right? So if we look at the equal weighted SPY, what's happening here is this is a massive head and shoulders on the daily time frame, right? You can see it better on the weekly as well. Massive head and shoulders pattern formation, right? And this is just basically removing tech's influence from the markets, right? If you look at normal SPY, it doesn't look like that. It still looks slightly bullish, although we are kind of struggling to make higher highs on the index now. But where it comes into play is where I get worried is this potential head and shoulders formation on the equal weighted SPY, meaning that if all companies are of equal weight, you can see that most of them are not performing well. This just shows that the regular SPY is being upheld by only a few names. So if those few names were to falter, we may be in for some trouble to the downside, especially if CPI comes in either as expected or slightly higher than expected. If we don't beat in a significant way, the markets may have a negative reaction to that. So looking on the daily chart on the S&P 500, we are looking out for a potential also head and shoulders. It's an ugly one, but it is forming. Yesterday I was saying that bulls really need to hold this 4-hour bull flag, but I didn't like how we kind of gave back the rest of the move on the day. As you can see, 4-hour MACD does seem to want to curl over. So if we do pull back into these lower levels, guys, it's not going to really look good for follow through. Most of these big candles have been due to earnings. So keep that in mind. We don't have any more big tech names to report outstanding earnings to lift these markets somewhat artificially anymore. So moves to the downside, unless we get some bullish macro data, moves to the downside won't come into much help from the bulls at this point. We're not going to get any more external catalysts other than bullish macro to really push these markets higher with, high 2% days like they have been in the past. Any negative headlines will be, however, amplified. So be very careful if we do start to break down here from our head and shoulders pattern, which you can see better on the, this is just a larger one, but it also shows on the relative, on the equal weighted SPY, it does show you that there is some downside bias coming into play. So be very, very careful with tomorrow's move, right? We're looking for bulls to potentially put a stop to this. What you really want to see is we don't want to lose more than 50% of this most recent upswing, because the further down we cut, guys, it's not looking good for follow through to the upside thereafter. Bulls really want to stop this shallow as they can to potentially set a daily uptrend leading into this. If they can't do that, we will be looking for downside levels. 405 will be the one to watch after that. And obviously to the upside, we have to start breaking this big area here. It's really starting to get frustrating for a lot of bulls out there, I know. Moving on to the QQQs. QQQs, one thing that I don't like about this chart is that we are moving into somewhat of a rising wedge pattern, right? So bulls are able to break the highs, but they're not breaking them by much. They're basically bull breaks with no follow through at this point. And you don't want to see that, especially at the higher end of a move here. Now, you keep in mind that bulls are in control of the weekly time frame. We do have a lot of space before our low here, before our support and our low level here. However, it's not, I don't like seeing, especially when we had Friday, yesterday, and Monday, such good days that we can just reverse it. And keep in mind, there was really no negative news today, but we weren't able to really finally crush this level to the upside like we've been hoping for. They are bull breaks lacking follow through. And whenever I start to see that, it just tells me that bulls are looking tired. looking very, very tired. So levels to watch out for: CPI. If we get good news, we really want to see this area here broken in a considerable fashion to give us the upside continuation that we need for this weekly uptrend continuation. If we don't, we're kind of looking down to the downside here, down towards our more recent lows. The numbers exactly on QQQs will be something like anything below 315 is going to be the confirmation almost that a daily downtrend is a high potential. And obviously, if we push above our 324 level, then we just continue our push to the upside and we finally confirm the weekly up move that everybody's been looking for. So let's get into the Russell here as well. Looking fairly decent as long as we don't get negative headlines, guys. I'll remind you that keep in mind the financials are about 25% weight in this index. So as long as we don't get major negative headlines on the regional banks, your Russell 2000 should be fairly okay to hold these levels. I'm always looking for written puts down in this level. There were a few opportunities this morning early in the day to write levels within the 169 range for about 0.4%. Not the best premium, but decent premium within my range still. At the same time, we are looking for bulls to just maintain this area here, accumulate, and eventually we're going to want to see on the weekly chart, we're going to want to see a push above our resistance level here of about 178, because you need to see the bulls confirm this weekly uptrend once and for all. It's now been almost 2 months, guys, that we've been consolidating this lower end of the range. Not a very, very pretty range. Great for writing options, slightly below though. But eventually you're going to want to see bulls confirm the uptrend and start putting work in against these moving averages. We're not going to do much if we can't get above these moving averages. So looking at the VIX, VIX was up slightly today in anticipation of tomorrow's CPI. So there's always that risk that if we do get some negative data, we do spike up on the VIX. And at the same time, that would equate to basically a very, very negative day on the indexes. So be very, very cautious of that. We do have some room to move to the downside on most of our major indexes, especially if the big tech names roll over. And we'll get into that in a little bit here. What I did want to point out also on crypto is also fairly weak. Now, I've drawn somewhat of a support range in here, right? We really need to hold this 27 to about mid 26 level. If we start breaking down into this with a very big candle with a lot of momentum, it's not going to be looking good for the bulls. That's suffice it to say. So what you want to see here on crypto, especially on Bitcoin, since Bitcoin is leading everything, is my time frame that I'm looking for is the 4-hour time frame. As you can see, we tried to put in a 4-hour upswing here, which was met by a big further bear move to the downside. So now we're kind of consolidating in this downside range here and kind of waiting for the moving average to catch up. Not very good, right? We were able to put in some good work in the afternoon here today, but what you want to see on the lower time frames is you need to see bulls confirm a 4-hour uptrend in a considerable fashion for us to be sure that we're ready for a daily upswing and start to take a bit of this move back. But until I can see some bulls, regain at least the hourly time frame in a convincing fashion, something like this, coming to sit down on support and then further continuation, that would also lead to 4-hour further upside continuation. I mean, I can't be overly bullish here. We're doing a good job of not pushing the lows, but I'm the type of trader that I need to see some form of a confirmation of an hourly uptrend leading into a 4-hour uptrend for me to be confident in this trade, for me to be looking for daily bulls to start resuming our trend to the upside. So downside levels, be very careful if we put in big red candle into this area. It's all about momentum. Forget about location for now. It's all about momentum. If we just die out here on the bear side and can't keep pushing down further, that shows you the bears are weak and bulls might have the chance for an upswing. But if in the next coming days we put in big red candles down here, be very careful. At that point, we would be kind of looking for continuation down to this 25K range on Bitcoin. Altcoins, as you can see, not doing too well because they're just literally waiting on Bitcoin to do its thing. Any strength or weakness on the altcoins at this point will be fairly muted compared to that. Now, what I wanted to talk about, guys, is our major tech names. We have to be very, very careful about this, okay? So Apple, as we can see, was not able to break its highs from earnings. It's starting to roll over. As you can see on the 4-hour time frame, 4-hour MACD is looking like it wants to curl over here a bit. On the daily time frame also, you have your RSI curling down. MACD not doing too much because we are kind of stuck in this range, but I want to focus on the 4-hour time frame here, right? We were not able to continue the 4-hour uptrend. Instead, it was a stop out at resistance here, and we kind of rolled over. So if the bears confirm a 4-hour downtrend, at that point, we are looking for our levels and daily support. First level is 169, and then it's the rest of the gap fill all the way down to 167. And if that would happen, it would look fairly negative on the weekly, right? It would kind of be a weekly, somewhat of an engulfing candle, which could lead us down to further consolidation to the downside here. So Apple a bit extended here towards the upside. We do have big resistance areas in play, so be very careful. If Apple starts to put in some -1 or 2% days, that will really not be good for the indexes as a whole. And a few major tech names are in the same situation where we're struggling to put in new highs because we've moved so much. The second one is Microsoft. Let's not forget Microsoft's weight in the index. Now, we are technically still in a daily uptrend, but look, the bulls are having a lot of trouble. This most recent daily push, we've almost given it all back at this point. So be very careful on Microsoft as well. I would not be surprised if we get some further weekly consolidation if our head and shoulders and rising wedge, right? Don't forget the rising wedge on QQQ, right? Rising wedge on QQQ. And don't forget, we do have on SPY, we do have a daily head and shoulders pattern forming. So, you know, those patterns are very, very, very strong patterns. They're bearish reversal patterns. So be very careful. These could be just led off by Apple and Microsoft that are not able to push higher. Keep in mind that if we do lose this level and bears are able to push down, any retest of this level then becomes resistance and is a potential for a daily downtrend, our first daily downtrend in a while, pretty much since after earnings on Microsoft. You would not want to see that happen. Any further downside after, if we were to break down to the downside, we would have to push down into these moving averages. The gap is still a ways away. We do still have good support here, but it's just to say, guys, we may be in for a few red weeks if we can't get any pushes above these levels from major tech, or if we get some bearish news from CPI. So be quite cautious about this, right? Keep in mind, these names have moved up a lot. You also see it on Meta, right? Meta, ever since earnings, not able to push higher. We've now come down 2 weeks in a row. Don't forget the RSI levels are fairly high on the weekly time frames. Our weekly MACD as well is looking like it is kind of tiring out, right? The bulls are in full control. My video yesterday still stands. Bulls are in full control. However, that doesn't mean that we can't get any downside. So keep in mind, guys, right now, what we're doing at this point is we're setting up for a daily lower high if it's not already set, and daily continuation of the downside, which would be a daily downtrend, right? Come here, do this, and that is a daily downtrend and is potentially further weekly consolidation. Now, it's a good thing that we do have a lot of support with the moving averages down here at 211-ish, right? But I wouldn't be surprised, once again, if we do get some daily further moves to the downside, if CPI comes out lower, or if our other major tech names, Apple, Microsoft, come down, Meta will come down as well, right? Unless we get some company-specific news. So be quite cautious. Downside targets are the 211 area for the time being. First stop at 220, obviously, then all the way down to 211. And our targets to the upside is our level at 244. If we do push higher than 244 for some reason, then we are looking to fill after, if we do crack the 248, we are looking for gap fill territory. So for these stocks to push higher, guys, we're going to need some very bullish CPI, and we're going to need for some stops on the banking headlines news, right? We're going to need to lift a bit of negative sentiment that is in the markets. Amazon also Amazon's been putting in some decent work, right? Amazon has been one that's just been grinding. It hasn't been having these big 3-4% days anytime recently. So what I don't like on Amazon is every time you kind of grind up, right, we get these 1-2 very negative days, which kind of removes a week's worth of work. And that's been the case for a while now on Amazon, is the fact that it's really just consolidating. If we go up to the weekly here, bulls are in control of this grind higher on the weekly. But expect, if we do get some negative impact, CPI once again, and from our other major tech names, Amazon won't be immune. Amazon is not one that's leading the market, keep in mind. Amazon is trailing. It's a lagging big tech name. So it's at the mercy of the index. And if you want to see why, we just go over to something like Amazon QQQ, right? Amazon QQQ has been trailing the index. It's been very, very weak for so long now at this point, right? In the lower end of its range. So don't expect Amazon to be a lead bull in this market. They really, if it wants to be, it needs to prove it to us. However, we do have a big resistance area up here over at the 108, 109 area, which is going to be our next level of resistance. And if we do somehow roll over, we're going to be looking all the way down to 101. My moves on this one is if we do move down to 101, I'm going to be looking to write some puts in this higher 90s to mid 90s area here. And just keep in mind that it will be brought down by our other names. We are running into resistance at the 200-day moving average here, which is not the best sign. However, this chart, at least you can say it's not overextended to the upside. So it does have some room to move if ever our broad markets do push up. But let's not forget, it can also come down because it is fairly weak and it's not a Wall Street favorite anymore, not with their margins. And unfortunately, it's kind of in the same situation as the next one we'll look at, Google, right? Google has not been one of the favorites because they're not growing as fast. Their revenue growth and whatnot has not been growing as fast as it has been in the 3-4 years prior. So that's why it's not one of the favorites. It's one of our lagging tech bull names. I say it's still a bull name because we are still technically in this nice weekly up move, but it does appear that we are kind of somewhat rolling over at this point, right? The bulls are not able now for the past almost month and a half to really crack above our 108 resistance and resume a confirmed weekly uptrend. We've kind of just been bull flagging around here for a while, which is still bullish, which is why my yesterday's video still stands. Conditions are still bullish. The names are still bullish, but we do have room to the downside for consolidation, indexes, CPI, and whatnot. So Google, we are still looking for a break of our 108 and close above. We've been having a big problem trying to close above this purple line. You can see why it's so hard, right? It took us so long to break it to the downside, and now it's taking us equally as long, arguably, to break it to the upside. So daily levels, in my opinion, at this point, we tried to break it today. We're not able to close below. Not great for the bulls, right? Not great for the bulls at all. So downside levels, downside targets, we are looking for 104. If we do start pulling down to the low 100s, I'm looking once again for short puts below 101 all the way down here into the mid 90s, right? So that's keeping an eye on Google. No significant moves for the time being, just trapped in a range. Tesla, right? Tesla's doing exactly what we said it was going to do yesterday. So he put in a very good move to the upside yesterday, and then we were looking for 4-hour consolidation for the resumption of a bull trend. However, the problem with Tesla today is that it gave back a lot of this move, right? If we were to give a fib line, we came right down almost into 60% territory of the move. So we gave back a significant portion of the move. I would have preferred if we would have only kind of given back a shallow portion of the move and started to resume to the upside. That would have given me a good indication that bull follow through is warranted. But now that we've pulled back over 50%, the most likely scenario does become consolidation. It becomes an equilibrium pattern range, which could break either to the upside or to the downside. In my opinion, it's going to be dependent on either company-specific news or general macro. So I did not like how far deep down Tesla did pull back today. I would have appreciated if it would have, from yesterday, I would have appreciated if today we would have been able to put a move in towards the highs. But now we have to wonder, guys, we're going to play out potentially an equilibrium pattern. I'd be surprised if Tesla is able to V-shape this. That's always the case. It's always possible. But for me, most likely scenario does become at this point an equilibrium range around the 170 mark. Keep in mind, MACD is looking kind of weak here, right? So that's not to be ignored. Daily pattern is still okay, right? This is still a daily higher low, but like I said on the 4 hour, guys, the 4 hour was my guide. So if we want to maintain this daily higher low, we're going to have to kind of keep these levels intact for a potential daily move higher. Once again, targets to the upside are the gap fill around 178. Targets to the downside, we cannot lose 160. If we lose 160, comes a good chance that we do push lower. So Tesla, my ideal time frame is the 4 hour. I want to see 4 hour bulls confirm our uptrend here, and that's the one I'm going to be watching for in the next few days. I want to take a quick look at N phase as well, then we'll do some semiconductors. Now, N phase, right? So N phase was not able to hold the move. It's kind of in the same situation as Tesla. If we look at the 4 hour time frame, I was kind of hoping for, well, you got to kind of widen this up. Whoops. Got to kind of widen this chart up, right? So we had a very decent move to the upside in terms of the, let's look at the Fibonacci retracement. As you can see, we came down about 60% in 1 day. So I was hoping that that N phase was one that would have been able to set another kind of higher low here and continue to kind of grind higher in its fashion. However, as we can see, guys, in 1 day, we kind of undid almost 2.5 days of trading here, which is not the best scenario that you want to see. You don't want to see N phase putting in these minus 3% days here near the lows. So it just doesn't give it just doesn't give me bullish sentiment at that point, right? So bulls are really struggling to hold any potential up move that we have. As you can see today, we did lose the hourly uptrend. We had a nice hourly uptrend the last 3-4 days here. And now today we're potentially looking at losing that as looking at a higher low being set compared to today's high, which was 162. So we really, next level for N phase, guys, we're looking at our 164 area to the upside. If bulls want to continue this move, keep it alive. MACD, not looking the best. And the RSI also curling down to the downside. We're getting really close, guys, to back to our 154. If we lose 154, expect us to push lower. And I mean levels to the downside. As I was saying, if you do believe this weekly move still has some juice left into it to the downside, we're looking potentially down, you know, our next support zone down here. It sucks to say, but is around the 130, mid 130 area. Before we could run into some very good support. We're really being upheld by the 200 weekly moving average at this point. So I'm hoping the best for N phase bulls here, but they need to start proving it to us. They need to start being able to hold these lower time frames and not giving back these engulfing moves, right? Now what I want to look at is semiconductors, because if Apple, Microsoft, Meta, right, start rolling over and start consolidating because they did have earnings gap ups, all three of them. If they start rolling over and start bringing down our SPY and QQQ, well, we're going to be looking at semiconductors as well, because as you know, guys, semiconductors, NVDA has been an absolute monster, but you know, these moves don't last forever, guys. If we start to get a rollover on major tech and NVIDIA also participates to the downside potentially, well, our semiconductors, I want to show you one thing, right? Semiconductors now, if you look at the MACD, we've been basically uptrending for the better part of the last 5-6 months at this point, right? MACD has been positive and RSI has been positive. Now what we've seen is MACD is looking like it starts to want to cross. Now we could get a shallow cross and this could be a nothing burger. However, guys, it's very notable to me now that you see, like, look, the bulls make this leg up, take back 50%, move higher. Bulls move up, take back maybe only 30% of this upswing and move higher. But this last third leg here, look, the bears have taken down almost the entire move 2 weeks ago, and we haven't really been able to make some upside progress to that yet. Well, it is still a weekly uptrend, but keep in mind, SMH, that 116 level is the area to watch. Now, we might, the likely scenario here off of such a big move, you see it better on the daily, right? So we were not able to confirm a daily uptrend. We got a double top with yesterday's close. I was looking for confirmation of a daily uptrend today potentially, but they didn't give us to it. They didn't give it to us, right? So we are now at this point in a daily upswing with no follow through. So be very careful, guys. This could turn into a tightening range. The daily uptrend is not lost yet, but if we were to lose the 121 area, that would be a loss of a daily uptrend. And at that point, we'd be looking, like I said, into our weekly lower levels. So very, very, very dangerous setup here for the bulls. It could also be a potential head and shoulders pattern that we're looking for, which is not the best look you want. And that would mean that names like potentially NVDA would be due for a potential rollover. As we can see, AMD has put in significant gains after its earnings, right? But even AMD, if semiconductors do start rolling over, this would potentially just set up for a weekly lower high compared to our high here of 103. And if we do get a weekly lower high, well, I'm not saying that the weekly downtrend is in motion, right? Because it is still a weekly uptrend. But if we do get a lower high, we're going to be looking at best for consolidation and at worst a rollover. So just keep that in mind, guys, with names on semiconductors, right? A lot of our names have put in good work, but they're kind of struggling, right? ON Semiconductors, same thing, right? We put in some good work. We're looking for the confirmation of the daily uptrend. Couldn't get it. Double top at the highs. And today put in a fairly red day, right? So semiconductors is going to be one to watch. The last ones I wanted to look at is financials, right? Financials, like we were saying yesterday, we did want to see weekly higher lows, which we are getting. We're not breaking last week's lows. We are still at this 200-week moving average, which is acting as support on the daily time frame. However, we are now at this point in a potential daily confirmed downtrend. So this is definitely at this point a daily downtrend. It remains to be seen if we continue towards the lows and if we can break these lows, or if bulls are able to potentially stop it and reverse that. If we do like that and break above 3250, we'll reverse the trend of the bulls. But for now, we are in a daily confirmed downtrend. Just keep in mind for these lower levels, guys. The proof on financial has to rely on the bulls at this point. On the 4-hour lower time frames, we can see that this bull move up was very good. It is a bull flag on the 4-hour, so we are looking for potential upside continuation. And that's what the bulls want to see. The bulls want to see something like this as soon as possible, right? If it goes a bit deeper and does like this, we will confirm a daily uptrend. But for now, I know it's a bit confusing. We are at this point, right? We are in a daily downtrend. So we're looking to reverse that, right? We need to get a higher low compared to this low to reverse that. The bulls have made a lot of space, but we are in a downtrend here. So we need to get that reversed. So keep in mind, financials, guys, what we don't want to see is all of our sectors at lows at the same time. If technology rolls over, if financials are rolling over, if semiconductors are rolling over, right, that will not be good for SPY. So just in my opinion now, the bulls are in control of most of our time frames, still in control of the higher time frames here, but we're looking tired. We're looking weak. It's not the ideal time to be going long, in my opinion here, right? So the bulls need to prove to us that they still want to be in control by breaking our higher end of our ranges here on SPY, by confirming breakthroughs on QQQ and not just failing them every time, guys, because that's not the best setup. So I'm still cautiously optimistic on our larger time frames. I'm still bullish on this market, but we may be due, or we may be in for some downside swings because of the fact that the market has been upheld by only a few names now for a couple months in a row. And you can see that best once again on our equal weighted SPY RSP, right? So be very, very mindful of this head and shoulders. If we do not get some broad market bullish support, meaning that instead of just a few names go up, we need the broad market. We need broad market confidence and broad market upswings in not only a few tech names and not only a few value names, right? We need the whole rest of the market to start coming up. So I hope you enjoyed the video. CPI is very, very big tomorrow because it's going to set the tone of whether or not we're going to get further rate increases potentially. So very, very important day. Very, very important next few weeks to see what this market's going to do. Are we going to be able to push above our ranges here, or are we going to start further consolidation and kind of stay stuck within this range here that we've been in, especially on SPY, right? This range since almost November at this point, where we just can't really break in one direction or another. and QQQ, whether or not tech is going to be able to continue to push to the upside, or whether or not it's going to start pushing down into further support areas before we gain some more accumulation and try for another upswing. So very, very important, guys. But I am excited. Don't let my tone fool you, right? I'm cautiously optimistic, bullish on the markets. I just want the best for you guys. I don't want anybody to get swept, right? I don't want anybody to get the rug pulled from under them. So I'm cautiously optimistic, and my position sizing over the last 3 weeks since earnings started has reflected that. I'm not going as heavy as I used to pre-earnings, right? I'm waiting because when we're in choppy markets like this, I want to see confirmed direction before going full position sizing. So I hope you enjoyed the video. We're going to keep up to date on this. Be very cautious about out there. And I hope you guys have been successful in trading. I love you all, and we'll see you tomorrow after CPI.